All right. Good morning, everybody. So, as we usually do, we want to check to see what happened in the overnight hours, kind of get an idea and a feel for what we could have in store for today. A lot of things carry over from other nations, first with Asia and then in Europe. And very often you'll find what they call a market wrap here on Financial Juice. It'll cover uh, the Asian market. And then, even though Europe's not closed, it'll often cover Europe as well. This is worth looking at the end of your own trading day, too. Say after the close today, if you've seen price action you didn't quite understand and want to maybe find the why behind it. Very often, the US market wrap will give you that insight. There's still a lot of Fed speakers on the books today. What we see here, very often not all we get, right? So like yesterday we had 5 Fed speakers out there chipping their teeth, and there was only 2 of them listed here. This list is usually reserved for those who have scheduled their speaking engagement in advance far enough to be landed here. So it's not going to provide everything that you're looking for. Even though the names aren't always on this list, once they start talking, you'll see something like this where Bullard has been out this morning running through, and the things that he's talking about is showing up here. So, throughout your trading day, keep your eye on something like Finance Juice. If a Fed official out there starts talking, you'll see them show up in here, and then you'll know, oh, hey, there's a Fed speaker out there doing something, right? It's going to be like this for a while. The Fed, after the FOMC meeting, when Powell gave his statements, they were apparently taken out of context by market participants. Everybody is trying to look down the road a year and try to guess when the pivot is going to come. And they're already working to price that in, that the Fed uh, is now trying to walk back or clear up the muddy water from the FOMC announcement, trying to get people to understand the there could be a pivot next year, but between now and next year, there's still a lot of work to be done. And they're trying to get this market to quit going up. It's what they've been doing. It's a delicate tightrope balance, though. They're not trying to crash this market. They're just trying to stop it from rallying. On Thinkorswim, go to Market Watch, go to Calendar. I tend to put the description next to the time, makes it easy to see. More jobs data, ADP employment at 8:15, and then we've got the 10, the 3, and the 30 at 8:30. PMI at 9:45, factory and ISM at 10, and that petroleum status report normally wouldn't be that big of a deal. Right now, everything is, right? Especially when they've been using energy for demand destruction. So keep your eye on the 10:30 report. But after that, once we get past 10:30, the only thing left to really focus on is, are there any speakers out there, and what is the speaker's agenda? What are they trying to accomplish? And right now, they're just trying to get this market to quit rallying. We're looking at a daily chart here. Very often, I talk about how even as day traders, we need to go out to the higher time frame, take a look around. Maybe you don't find anything, but I guarantee you, if you never look, then you're going to find anything. I made a moving average about a year ago that focuses on how far away from the 10 period moving average a market has gone. Think of the 10 period moving average as the center of a basketball court. Everything starts in the middle. So when price is near or at its 10 period moving average, basically at the starting line, and it could make a big sweeping price leg in either direction. Once we're above or below a moving average, the 10 especially, how far away from the 10 becomes relevant, becomes important. It very often defines the edges for our LinReg or linear regression swing high and swing low. Right? It's all a bunch of nerd talk for asking how far away from the 10 are we right now, and what's our expectation with this market. Well, we topped out about 3.5, maybe 3.25. That's been the average for the ES this year because we're looking at just 2022 data. Once we got to that mean, to that average, the distance from the 10, price did what we expect price to do. It paused there and it is now consolidating. Every day that it consolidates, the 10 is moving closer to the price. So we see this indicator coming back towards zero, not because price turned around and ran back to the 10, but because price held there long enough for the 10 to catch up with it. At places like stockcharts.com, they would say that this is healthy and that the market is healing after making a very large move that almost broke the technical analysis, right? Because we don't do technical analysis on parabolic markets. So the longer we stay consolidating and sitting here and letting the chart heal, the better the next leg could be. Now, when it comes to that next leg, right now it's all back to the defining structure of how is the market going to take the Fed coming out and trying to walk back that dovish stance that they seen Powell take or that they imagined he took, right? Because a lot of people said, I didn't hear him turn dovish at all. So why all the buying? Well, they're looking ahead, right? They're looking a year out and thinking, well, the Fed will probably have to pivot in the later part of 2023. Well, that's a long ways off. There's a lot of work to be done in the middle. So the Fed, maybe he didn't do a good job communicating, right? Or maybe no matter what he said, they were going to second guess where the pivot would be. What we want to see on this chart and on this screen is, has the 10 caught up yet? And even though we have not continued the rally since we topped out on the 29th, we haven't fallen either. We're still maintaining within the range of that big candle from the 29th. Right? So that's our defining candle right now, the controlling candle. I know zooming in like this isn't very comfortable, but this is really the only bit of data that we need at the moment. As long as price can continue to withstand or maintain this range between 41.50 and 40.80, then we look at this as good, healthy, constructive, positive. This is in no way bearish. So you don't want to run out and start shorting a bunch of stuff. I know it seems like we ran up really fast and it's time to flip the script, bear up and run this thing back down. And I'm not disagreeing that we probably will go down or not. That's not my argument. The argument is we haven't turned bearish here. There's no signal here that says we should be bared up. And until we break that low and start moving towards those lows, I wouldn't try to short anything. Same thing with a continuation. If you look at the moving average toolkit, we're straight up bullish in everything. 4/10 and price above both. 10/20, price above both. 20/50, price above both. 50 is not necessarily over 200 in a lot of names, but price is above 50. So that's surge, momentum, trend, and part of strength to the upside. As much as you want to get your gut involved or watch the bobbing heads on TV and feel like we should be bearish and everybody's looking down and they're all trying to explain to us why this market's going to go down, the technical analysis says that we're headed up. And so until that changes, look for your new entry and continue the play. I wouldn't try to go long until we resolve the pivot 41.45, and I wouldn't try to go short unless we resolve the pivot at 41.80. And sure, we're looking at the ES, but those numbers easily translates to SPY or to the SPX, right? Just move your decimal point over. This pattern or this shape is in all three of those S&P symbols, right? So it doesn't matter. Trade what you have, not what you think, because nobody cares what you think. We are still sitting in the middle of the weekly expected move. And if you look at the swing high and swing low, when we got up to 4,000, that was the swing high. Instead of coming back down and completing the next swing, we went higher from there, right? So this long-term linear regression line from left to right across my screen, that will handle the bigger picture, but it's why that they gave us one in a drawing tool, because you actually do want to start a new one from the lows of the year, right? And the way that this thing will work, you just pick the day anywhere with your mouse, anywhere, as long as you're on the right day. So from 616 and then just move it to the right and it'll do the rest. With that one in mind, you can see how we've got our swing high after our swing low. And it's either going to maintain the midpoint right around 40.50 and make a new leg, work on that anchored VWAP, that cyan line, or we're going to get a full swing low to around 4,000. Markets don't move in a straight line, right? Volume, yet again, seems very light. And like we've been talking about, it's 2 hours to the open, and this indicator that is counting up the overnight volume really starts to pick up volume in that last 2 hours. So it always seems like we're a little light, but that's all right. We look at this thing every morning anyways, because we're really looking for it to stand out, right? One of these mornings we're going to come in and this cumulative overnight volume is going to be at 140 or 160 or 200 in the pre-market, and we'll be talking about how much volume there is, how explosive and expansive the volume is. So on any other day, it's pretty much just a glance. We look at it and say, yeah, nope, nothing really there. Doesn't matter. We turn it off, get it out of the way. It doesn't mean that it's not useful, right? One of these days, it's going to give us the signal that we are looking for. And until then, we look at it and just discard it, right? 9 times out of 10, indicators are not giving you a signal. So, don't try to invent a signal that isn't there. What we got for today, we are still flirting with the daily pivot point. We finally did get through it. Buzz beat off of it, but really didn't get anywhere up to that 41.15 as our Globex high. So we're in a very narrow range here in the overnight hours from our Globex low to our Globex high. And that makes sense because we've been range bound since the first of the week, really just kind of holding here in this topping pattern where the market is digesting everything and trying to make a decision about if it's going to continue the leg up or if it's going to retrace and head back down. Speaking of retracements, 38.2 is our line in the sand for how far a pullback should go. It should not pull back farther than that if we're going to continue in a bullish move to the upside, right? We get a pullback and then we go up, and then we get a pullback and then we go up. So, and we're talking about, is it just a pullback, and has the pullback gone too far? The pullback has not gone too far, right? We haven't even come close to testing that on the low side. One more check mark for the idea that you should not bear up yet. The base case is that we're going to remain range bound through the day today, barring anything that the Fed might say. And it's always imperative to be cautious when they're talking. They're human, they are fallible, they make mistakes. All it would take is for one of them Fed speakers today to really put their foot in it, right? To just say something completely stupid off the wall that they spend a good week trying to walk back or fix or in some way recidify, right? So there's always that threat that a reporter is going to ask a question that will be taken out of context or misunderstood, or the Fed will just straight up screw it up. Should something like that happen, the range that we're looking at will be destroyed and there will be drastic swings in one direction or another. The speaker did leave Taiwan. There is expectations of ramifications of her actions. So far, it seems to be some sanctions on chip, and then a lot more of their angst and their sanctions seem to be on Taiwan than on us. But there's a lot of people saying we got to wait for the other shoe to drop. So I would be keeping my eye on anything that implies the shoe is dropping. The analysis yesterday at lunch, when I do my lunchtime analysis, was that we were basically going to maintain the range and that we would want to set alerts at the high and the low of the range and leave it alone if you're looking for a big move. And we didn't get it, right? So when we had that run up and rejection yesterday, that was like the best move of the day, running it back down. Of course, running it up there was fine. It just a lot of that run up came during lunch, right? During a period where we're not supposed to be running. So the flip was better than the run up, I guess. It depends on what kind of trader you are. This is very likely going to be the same kind of thing today. We're just going to be maintaining the range, having an expectation that we're going to maintain the range. Keep in mind where the pivot points are at. We're going to be focused on the pivot points that we have, like open, high, low, close, weekly high, low, close, floor pivots, like the one that we're looking at here with the daily pivot at 4106. And, the value area high, the value area lows, they're going to be merging and kind of overlapping each other at this point. When you're sitting inside of yesterday's price action, you very often get this choppy, uh, nasty looking market, right? Basically, what we're looking at here, the last 3 days, there is some trading here that can be done, but it's not going to be clean. It's not going to be, efficient. It'd be a pretty rough market to trade. Recognizing the kind of market that you don't want is one step towards becoming a better trader. So, maybe deciding that this isn't the kind of market that you want to participate in. Just set your alerts for the edges and trade options in a sideways market until this market quits being sideways. Should we break through to the downside, 40.80 is yesterday's low. We have an ADR half very close to the weekly pivot at 40.60. We have a 50% retracement at 40.43 and then a full ADR at 40.23. That would be our downside pivots to focus on. Upside pivots would first get us breaking through our own Globex high. The ADR half at 41.33, yesterday's RTH high at 41.45, and a full ADR at 41.70. The longer we stay range bound, the more significant it will be when we finally break this range. And we will finally break this range, right? It's the one promise the market always lives up to. We can't stay here. All right, we're looking at the volume profile. We are flirting with the top of the box. When we're at the top of the box, we have every expectation that we will go to the bottom of the box. If we were at the bottom, we would expect to go to the top. When we're outside the box, we expect to get back in. We are outside the box right now. There is a lot of volume resistance, although it's not the point of control yet, because there's still days left of volume around the 39.50 area, right? We got Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday. Well, Wednesday, before we finally start to get rid of that point of control. All those days that we spent below 4,000, right? Between 3,900 and 4,000. That's where all of the volume is at right now still. But since Friday, we now have Friday, Monday, Tuesday, and we're getting into Wednesday where we are sitting in this new leg above the point of control. And you can see how much volume we're getting there. The idea would be to keep an eye on this, maybe circle back around noon or even in the later part of the day and see if we lose Wednesday's data here, how much we'll uh, lose off of the volume profile and if it will significantly shift that point of control. We talked about 40.90 or 40.80 being the low of our range right now. If we break that low, it's open season to the downside. There is no volume to catch us, no help, no assistant until we get below 39.80. So if we break 40.80, it's a 100-point drop, and it's going to be like a brick in water. Mapping out the 5x5, we still have that untouched point of control at 40.73. Another one at 39.75. And there is one from Tuesday as well. If we were to add back one more day, there's still one more volume profile down here. Right? We just got to put another day on the chart. It's unlikely we're going to see those numbers today, so I'm not interested in backing up far enough to market. It's at 39.27. Like I said, we're very unlikely to see that, right? It is worth noting that Bitcoin maintained the rally up to the top of the range. Now, we don't look at Bitcoin for any kind of correlated state, right? We're not looking at this saying, well, the ES is going up, Bitcoin's going up, or Bitcoin's going up, so oil's going up. There's no discussion of correlation and inverse in market dynamics. It's just straight up a risky asset, right? This is like the purest form of risk that you could ever take, at least in the current market conditions. It doesn't get more risky than this. So when you see Bitcoin getting bid up and actually holding it, then it shows that appetite for risk in a global point of view. When we had that rally up in the market yesterday and everything sold off yesterday afterwards, this has already rebounded, already came back up and is retesting against those tops. So the appetite for risk is there. That's really what we're using this for. Is there an appetite right now for risk? Absolutely. Right? Everybody's not turning defensive and looking to get out of speculation. It really looked like gold was going to get somewhere yesterday, and then it didn't just pull back with the rest of the market. It kept on going. So right now we're underneath that 4-period moving average. So we're under the surge line. We're under the VWAP. We really want to see gold just kind of stabilize at this point. That move in the dollar yesterday afternoon was extreme. I know it might not seem like much, but that breakout timed perfectly with this move to the downside. Right? It's why we watch these things. The bonds, the dollar, big exaggerated sweeping moves yesterday. Oil's still fighting. You can see this morning we're getting another run towards that 4-period moving average. Uh, $96 is the line in the sand at the moment. If we can get above that, we want to focus on just, from pivot to pivot. So from 96, I would aim for 98. But the first tell is going to be getting through yesterday's high. VIX was signaling reasonably well yesterday. Again, I'm just happy to see that it's participating at all at this point. Earlier in the year, it hasn't been very useful. So continue to keep your eye on it. That thing just absolutely lit up yesterday and was a nice tell, a nice early warning that things were getting ready to make some moves. And hey, I appreciate it. I take it where I get it. So continue to watch those VIX futures. Just don't be surprised if they don't move, right? Because that's what we've been getting out of this thing a lot this year is nothing. So if you see moves in the ES and the Nasdaq and you're not seeing it reflected in the VIX, all right, well, we've had a lot of that this year. But on the other hand, it's been early a number of times in the last 6 weeks. So keep your eye on it. You see that thing start to dump or spike, that's your early warning for the for a big move in the ES and the Nasdaq. All right, we're looking at the euro US dollar. You can see we got a little rowdy yesterday, but we're right back down to the bottom of that range. Just a whole lot of running like a hamster on a wheel. Didn't get anything accomplished, right? Nothing stuck. Getting that megaphone pattern. So continue to keep an eye on this, looking to see, if we're going to start heading back towards 102, 102.7 ish. All right, we talked about breaking out of this channel the other day, US dollar Japan. Real change in sentiment yesterday afternoon. Rally back up. Nice wick off the low there. Have an inside day breakout already started. We're working on getting to the top of the week, right? If we were looking at the weekly candle, that's the goal right now. 136, just getting back inside the channel and getting back towards the top of last week. It's worth noting yesterday when we're looking at the weighted AD, how strong it was, how positive the readings were, all the way up until it all just crashed and burned, right? We were sitting at +5. The marker or the line in the sand has been +2 or -2 on a bear day. We were well above 2. Pressing into 4s and 5s by lunch is a really good signal. Like we just straight up had some great intermarket tells yesterday that said go long right up until they evaporated and dropped off, right? That was part of that rally to the upside. When we did start topping out, these breadth indicators, something like the weighted AD, they're not going to be immediately responsive, right? It's just that's not what they're designed for. So one of the problems that we have with using the weighted AD is on a strong read like that, it very often won't go back and turn negative fast enough to give you any real insight or value. But yesterday, it surprised me with how fast we dropped from, say, 4 and a quarter to 0. That move came very fast and very sudden. And yes, it was fast in the price. So you would think, oh, what's the big deal? Who cares? Well, this thing normally is slow to respond after having gone to a +4, plus 500, right? And the fact that it wasn't slow, it moved very fast yesterday, uh, was just one more check mark. It takes a while to get used to any indicator, especially when it's a custom modified indicator. So pointing out any tells that are in this thing, anything that gets my attention to become more familiar with how to use it, how to read it. Definitely interested in sharing that with you guys because these are the tools we use every day, right? We want to know as much about them and as much about the signals as we can. So a rare sudden drop off in that weighted AD yesterday. The ticks, they never wavered. They told the story the whole time. Even in that run up, we weren't getting into plus 1,000. So sure, we had the green candles, the market felt bullish, but this thing was telling us it wasn't going to stick. We never tagged 1,000 in that run up. We kept dropping back below the zero line. So it was green, yeah, but it was indicating that don't trust the run. Take it while you get it, right? Get your money while you can. Paper hands, get your good 6, 5, 10 points, whatever. But this was telling you, we weren't breaking out of yesterday's range. We weren't going to go on the march and continue to expand. Cumulative tick wasn't really much insight. It looked like the Russell was going to work on crossing over the group, but it never had a chance. And the NY Fang, the New York Stock Exchange Fang, right? Rather than using a custom indicator to show the monsters of tech, we've been using this. On this, we had that inside day breakout, but it didn't stick. And that was the flipped, right? That was the spot. We got there, we tagged yesterday's high, we rolled over, and that was the end of the game. Been using KRE and the NY Fang as indicators through the intraday, and it's been really useful. It's been insightful and valuable. On KRE, we never even got close to that close. And really, we got tangled up in our own Globex. That was about the end of it. Finance went, and the S&P went with it. That trend line break was pretty darn obvious, especially when it lined up with everything else, right? With the way that NY Fang and everything else was moving. So we're going to continue to use these kind of tools for our intermarket tells. The money flow yesterday was really extreme. No, I don't. I took some pictures of them. The 210 spread has continued to be a nasty mess. Keep your eye on those. So of course, now that I'm looking for it, I'm not seeing it. Those of you who've seen me stream know where to get it. We go to Market Watch, the Visualize tab, Index. I tend to kick these things out and then set the index in it. Usually it's just the S&P and the Nasdaq, but it will It will look at your own watch list or any index that you want. This capital flow is what was pretty significant yesterday. When that rally was taking off, we still had more issues down than up, and yet the money flow just went crazy bullish. And then when it all rolled over and dumped, the money flow didn't really change back. We stayed uh, divergent, more money going up than down or in than out. Follow the money, right? That's what they say. Those firms will go on, Bloomberg and MSNBC, and they'll say one thing, but their money is doing something else. Follow the money. All right, biotech is up the most this morning. Been kind of maintaining within this range. Bitcoin as well, back to the top. And we got that breakout in energy, or that expansion in energy, oil. IBB is another one. Significant move in the pre-market, nearing the top of that range. A lot of our charts look the same, right? Which makes sense. The energy markets, or the energy charts, are all going to look the same. Sectors are going to group. You see, the XLE, unlike IBB, hasn't had the same kind of expansion. Sure, we're up a little bit this morning. We're basically inside day breakout, sitting outside of yesterday's range. So we're going to be looking for energy today, see if it's going to hold the move, right? If it's going to be able to maintain that breakout from this morning. We're looking at a red to green setup in energy. So uh, the way I like a red to green is that we've been trending to the upside, and then we got a red candle because we pulled back just a little bit, and that's what we have, right? We've been coming up off of those lows since the early part of July. We got above the anchored VWAP but couldn't keep it, and then we got a little bit of a pullback. So we have the red to green set up this morning. One of the benchmarks is that we open higher than the previous day's open. Well, we've got that beat because we're completely above yesterday's range entirely. That gives us yesterday's range for support. So as we come into the open and the market wants to fade down a little bit, yesterday's high would be one of our benchmarks to look for that support to actually hold. It's not a red to green, but XOP, it's struggling on keeping above that anchored VWAP. And we do have the gap up and the gap out. So we're going to be looking to retest that 307, 308, see if we can get this expansion. Still a lot of issue around 145. I'd be watching that. Uh, Gold was on my swing list. I put it in the chat on Monday. So far, it hasn't really had a good follow through, but our entry was never triggered too. So, at least we weren't in it to see it not work. When we're looking at a capital rotation, which sectors are moving and which ones are not become more relevant, right? Because where's the money going? We don't follow the money. Utilities, gas, staples, healthcare, these are defensive sectors, right? So if we get that strong market breadth where most of the market is going up and yet we're still not seeing the S&P and the Nasdaq rally, that would be due to something like the monsters of tech staying weak and holding us back while everything else is running or being strong. Right? So kind of keep your eye on which of the sectors are moving. Financials are basically the only thing holding up the market right now because we haven't been getting any help from tech. If we lose finance, tech ain't going to keep it, right? Tech isn't enough right now. So continue to watch finance very close for any market tells, any signals that this is losing its grip and going to break back below, say, 32, um, 32 half. TrendSpider has opened its own Discord now. So if you are a member of TrendSpider, check your emails. Maybe look in your spam emails. They've opened their own Discord channel, which I thought was pretty cool because a lot of people have questions about how to use it or they have feature requests, and now you're one step closer to the people who made this thing, and they have a spot for you to put in your requests for indicators. I've already done that, but you now have a place also where you can just ask questions of other users who are using the darn thing too. So pretty cool. We don't have very many sectors this morning that are in the red. We're either flat in most of them, or we're above my benchmark of a half of a percent. It's going to take a moment to load, but I think looking at these numbers, it's worth asking that question that we used to ask, and I've been kind of backing off from it lately. How many names are up this morning? Right? If you think about something like the Nasdaq 100, how many names in the Nasdaq 100 are up at least a half of a percent? Better, how many up at least 1%? And the same thing for the S&P. It's a number that I haven't been asking too much lately because there's times where it doesn't matter, right? But looking at how many sectors we have that are up more than a half of a percent, I'm more interested in asking that question this morning. While we're waiting for this to load, we have a webinar today in the Bullish Bears at 1 o'clock. The company creator from Whalestream is going to be uh, in our community. He's going to give a walkthrough of his platform and um, answer questions on unusual options activity, and then do a walkthrough on how he uses the platform. I wouldn't miss out on that. If you can't make it, don't stress. We're going to record it. And when I said 1 o'clock, I meant 1 o'clock Eastern because nobody cares where you live, right? We're all trading the same market. So, we all use the same time frame, Eastern. Oh, what the heck? All right. Start with the heat map. So we got the S&P 500. We want to sort it by market cap. So we go to pre-market change percent. Use the filter. Get rid of 500 names. We really just want 100. It's kind of hard to hit 100. Just get close. 88 is good enough for me. There's a lot of gray here, so we want to get rid of a lot of that gray. We just make it more responsive, right? That's all we're doing. We're going from the whole number of 3 to -3 and using a decimal point, tenth, and that it makes it respond faster with color changes. So financials, obviously the monsters of tech, which the bigger the box, the larger the market cap. Apple's flat, that gets my attention, right? It's a little oddity that stands out. And retail was doing really good the other day, and then it just went to hell with everything else. But it was, Walmart, Macy's, American Eagle Outfitters, Dollar Tree, not Target. I see Walmart flat this morning, Lowe's, Costco. Maybe look for a little bit of a turnaround there. So that's the S&P 500. Flip that to the Nasdaq. We don't need a filter here because it's already 100 names. I just apply the change in color so it responds quicker. Again, big box means greater market cap size. Couple of chip names that are flat kind of gets my attention. And I would have expected more out of communications. But after taking a look at the heat map, and we're basically just looking around to see if anything really stands out, like Nvidia being down more than more than 1.5. Then we get into the screener and start asking that question about how many names. So right now we're looking at the S&P 100, and we're asking how many names are up at least 0.5%. 27. Okay, that's not really bullish. Take it to a 1%, and it's going to be even less than that, right? 7 names. Okay, nothing there. Do the same thing with the NASDAQ, 0.5%, 24. So we're talking about 25% of the NASDAQ is up 0.5%. That's not overly bullish, which is not a bad thing, right? I don't want to take the wind out of anybody's sails and think I'm poo-pooing on this market. I don't like it when everything runs 2% in the pre-market, right? Because then the market opens and we don't really have much to participate in. We're up slightly, but that carries the narrative that we're still just maintaining this range. It is my day to stream. I will be in the futures this morning, 9:15. I'll see you guys there, or I will see you all tomorrow.